Hey, hello everyone. It is Saturday morning here in Chicago. Welcome to my channel, and we're gonna do a little bit of a review of the monthly time frames. It is November 1st. My name is Chris, and I'm with Elliott with Cafe. So let's jump over and take a look at the main indices, and then we'll revisit Bitcoin as well and see where everything stands. We continue to be in a pretty massive uptrend, pretty much since the financial crisis up in 2009, 2008, 2009, and we're moving from a lower left to the upper right. I would not say it's a bullish market. I would say it's an uptrend. The definitions, I don't think that really matter in here. I guess when you label yourself as a bull or as a bear, you might have a tendency to just kind of stick with those labels, or you're looking at the market through those lens. But uptrend and downtrends are I think more appropriate, and here we have a pretty massive one with intermediate corrections. I think we've completed, a large wave two in here in 2022, 2023, and we've gone on this wave one red, pretty deep pullback, here in the spring of this year, and we are now, several months in a pretty strong uptrend with closes. If you see these bars towards the top of the range, towards the top of the candles, and that's continue to look pretty good. So now, not everything goes straight up. If you're going to get a couple of months of a setback in here, it's totally fine. I mean, I think I talk about this in my daily updates, how we're probably running into the top of this wave one. It could be maybe towards the top of this channel, and then we'll get another one of these pullbacks for a wave two. The size of it, we'll see how that's going to be, but this trend, it's pretty much uninterrupted, and it continues to look pretty strong. We have an RSI that it's just up into the 70 or 75 zone, kind of a perfect area for an uptrend with plenty of room to go. So it's funny how when you step back and you look at these charts, they just look so nice and clean without a lot of intraday noise, and it's hard to kind of tell here where the Fed meeting was, or I mean, yes, you did have the tariff drama in the beginning of the year, but and then you have the kind of the rate hiking cycle back here due to the inflation after the pandemic. But it's just the rest of it, it's just kind of nice and clean. So I wish I'd be so disciplined as to just stick with these with these trends and not get shaken out of certain positions. But in hindsight, here it looks pretty nice. So that's the S&P 500. Let's take a look at the Nasdaq Composite, and again, just a nice clean move. And one thing I wanted to show you, it's and we can do this maybe if I go quickly back to the S&P, although I think we can do it in the Nasdaq as well. I want to show you how important the levels are once you make new highs. So I will take this tool, and you can see this is what happens. You see, you make a new time high, the market comes back and retests that high. You make another high, and the market comes back and holds support right there at the place where it created that high. Then we made another high back there, and when we sold off in April, we came exactly there. How how nice and simple this stuff looks, I know, in hindsight. But why wouldn't it be that in case we're going to get a sell-off, that this high in here at about 61.47 is the one that we can look to see if it's holding, or it's the one where people might want to get involved in an uptrend. So just a way to kind of see how simple whatever was resistance or a major high, once it gets taken out and the new uptrend begins, then when it turns back, it offers a pretty nice support. So just simple pure price action. All right, so Nasdaq Composite again, looking good. I think it's looking towards the top of this channel. This might take several months in here, but again, the price section, after this wave too low, I mean, look at this rejection or reversal candle from the bottom of the trend line, closing towards the highs, confirming with the following month in May, and then just a pure uptrend with closes towards the high of those candles. Right now, obviously, the support comes in here at probably at about 20,200. So if over the next several months we will pull back a little bit, that would be the level that I would look probably for the wave 2. If this wave 1 it's somewhere near completion, but this just kind of keeps keeps things in perspective and looking nice. So the uptrend here continues, looks pretty healthy. The semiconductor SOX, I think it looks even better. We had this pullback in here, then this one shook out quite probably a few people, a nice simple ABC into a wave 2. And if I kind of measure that, we pulled back about 50%. It could have gone maybe all the way up here to maybe like a 61.8, but a nice rejection, and now we're, I think, beginning this next larger leg higher through a small one too, and then I mean, look how powerful this looks. So I know it's probably easy to to forget these charts when we look at the daily charts or maybe even intraday charts. But these kind of do keep everything in check and just kind of gives us a good look. It's hard for me to count this as a fifth wave. From where, with what, how would you even label this as a fifth wave, unless you really want to be and say, oh, I'm starting my wave count from this low and I go 1 2 3 4 5, and why not place a wave 5 over there because it looks cool on Twitter or somewhere else. This is like, it's pretty strong and powerful. I mean, look at these closes. Maybe this is just getting started, right, and we're getting ready to make some massive moves to the upside. So that's SOX. Russell on the monthlies, again, barely breaking out after a massive sideways move. And I know that whatever really good companies are in the Russell, right, they're getting pulled out of here and moved maybe into the S&P 500 or what have you, but that's why this is a bit tricky to follow. But if this is a wave 2, again, we're just getting started here in the small caps, and basically we're going to new all-time highs, and that's a pretty powerful signal, for the months ahead, I would say. Let's see if we can get a bit more traction. I mean, look, is it unreal to say that this targets back here towards 4,200 or 36, 42, 4,000 in the Russell are unrealistic? I don't think so. I mean, you're in a channel, it's pretty clean. So we'll look. I'll continue to favor that. Dow Jones, I know it's an old, and some people call it like a tired index, but look, just gorgeous the way this looks. Beautiful rejection like the other markets, and now looking probably towards the top of this channel over the months and years ahead. We'll touch on Bitcoin. I'm going to go on a different platform here shortly, but let's double check here what's going on with gold and silver on the monthly time frames. Again, people have asked me about kind of where would you start a wave count when you do, and I might have to make a video on that. But you start from the most obvious place, and again, we're not necessarily here to show how right we are or to massage our egos about how long can we count and from how far back, and to make everything look perfect. It's, we're here to hopefully make money with the Elliott wave and with the other methods, with technical analysis in general, and with looking at good companies, looking at fundamentals, combining these methods, coming up with the best way to analyze a market structure, price action, what have you. But the wave count is supposed to serve you to make money, not to show you that you have an extraordinary ability to count the waves, looking in the past, because things happen in the future and in real time. So I would say count whatever wave, whatever sequence helps you to get you to your goal, from having less money into your account to more money into your account, and that's the helpful way to do it, I think. So you know what I know right now about gold and what we've been talking about ever since the breakout is that it is the beginning of a larger move, some type of a being a wave 3. We don't know at what degree, but this is good enough for me. And yes, it's extended. I mean, look, RSI, it's maybe in the 90s, but there's not a massive divergence. Could it correct a little bit? Sure, this wave 3 could continue to go, but we do know that it's probably a bit extended, that we might get a fourth wave, and then a 5, another 4, another 5. So for people that say the gold is done, I don't think so. It's just probably going to move sideways for a little bit, consolidate. It's got plenty of room to work. I mean, look, let's say that this is the top of the third wave. You can just say, okay, wave 4 versus 3, you're looking at, even if it comes back at 38.2, that's 288 from where we are at the moment at 360. And that still would not be a top in gold. It would be a normal correction, and it would just, kind of probably come back here and then go back and make a new high. It's. I mean, look, there's a lot here that still needs to happen before you can say that gold has, it's nowhere near a completed pattern, not in my view. And then take a look at silver, and kind of a similar story. Actually, I think silver has a lot more, because we barely just kind of scratched the top of this wave from back in 2011, whenever this was. 1-2 into the 61.8, 1-2 into the 61.8. A quick 5-wave move in here, probably another wave 2 within a 3. Still develops 4-5, 4-5 at this degree of trend. At this blue degree of trend. Then you got to do a 4, and then you got to do another 5. So I mean, yes, it's it doesn't have to happen this way, but that's kind of what we know from wave theory, that markets move in this type of a structure, and this continues to look incomplete and just kind of broken. No, when you have a wave 1 and a wave 2 like that, I mean, what is this? It needs to continue and ebb and flow to have something proportionate with this move and this pullback, and that's, I mean, it's just kind of halfway or something. So that's that. Okay, let's take a look at Bitcoin, and that's just how I count it. I mean, I'm sure, and you guys can tell me how kind of how you count the structure. There are several ways. I also have alternate counts, but it really doesn't matter a whole lot, what happened back here, and kind of exactly, maybe this is a 1 and a 2, and this is another 1 and another 2, and then that's another 1 and another 2. So we can create all kind of scenarios. Mine is like that, super cycle, or a cycle here, back in a wave 2, 1, 2, 3, 4, 5 for a wave 1, primary, pull back in 2, intermediate 1, 2, 3, 4. Because look, you have a correction here. I mean, how do we, when you count, corrections help you. Corrections are the one that help you make the connections between the impulses. And that's how you can kind of tell how many sequences you have in a move. By the if you don't have corrections, like, you're not going to know. It's just a continuous impulse, but the corrections are the one that break and give you either the B wave or the wave 2 or the wave 4. So that's the one that kind of connect everything. So this is the largest correction after an impulse. This is the largest correction after an impulse. So if you start from the slow, then you do have a move up and a correction, 2, a move up and a correction, 3 and 4. Now if this was 5, then you have another correction and you continue to go. So it was 5. If you were to be this wave 5 in here, this red one back here, right, and you would put a wave 1, then you would have already had to do a much larger correction. But the market didn't do that. The market moved higher and made a new high. So you cannot place this wave 5 back here, because, I mean, you could, but then you would have to change the subdivisions. So it would be 1, 2, 3, 4, 5, and a wave 1, then a wave 2, and all I have to do is just kind of change the degrees. But see, it doesn't matter. It doesn't matter. You can do this as a 1, 2, 3, 4, and then you start again the count. And that wave 5 continues, and you say 1, 2, 1, 2, 3, 4, 5, 4, 5 for the wave 5. And then later on, after this move is done, then you can relook again and place the label in a way that looks, let's say, more appropriate for for the type of the degree that you're in, being that a primary or an intermediate, right, minor or what have you, or maybe even go higher. But this is not the problem. The nice part is the corrections and the waves, the impulse waves. So impulse correction, impulse correction, impulse correction, another impulse, another correction sideways. See what I mean? So this is kind of how I look at it, and kind of what helps me kind of try to stay with the trend. Look at the RSI here. Look at this beauty, right? Just a nice uptrend. There is not even, I mean, before, when it used to be very volatile, but right now we're just kind of nice and tight and just sitting pretty at 70 RSI, or whatever it is, 65 or something, and it just kind of continues. So, look, let's do this exercise. I can delete this and just go, keep this wave 3 like that, and then just I'll do something live right here. So we can do this exercise, and then I'll finish off. So you can go 1, 2, 3, 4, and 5. Okay, but now we have to change this degree to a minor, and 1, 2, 3, 4, 5. And now check this out. Right, now we go impulse, and we go from there, and we go right there, let me just line this up. So see what I mean? That 100%, I want that to disappear from there. It's probably locked, but I'll move it. Come on. Okay, so you see, it's kind of the same thing. 1, 2, 3, 4, 5, the minor degree. You're finishing up an intermediate. You come back in a short wave 2, and then you continue to go. So what's the difference between having a 1, 2, 3, 4, and then you begin a 1, 2 in an extended fifth wave, or just doing a 1, 2, 3, 4, 5 basic wave 1, wave 2, and then you're done. And then you continue to go 3, 4, and that would be a wave like that, right? It's still in the same kind of a direction. So anyway, thanks for watching. Let me know what you think. I'll see you next week. We're trying to do daily videos here with the market coverage, every day on YouTube, to just, kind of Monday to Thursday, in my kind of next wave report, and just give you my thoughts daily on the market price section and stocks and crypto, whatever I think it's interesting. So thanks for watching. Bye bye.